Thursday, November 13th. First off, I want to tell you, I will be on live with Trendspider this afternoon at 4 o'clock on their channel. I think I can do it over to my channels as well. So it's going to be on Instagram and on YouTube. So those are the two places where I think I can do Restream or whatever software that they use. But we're going to talk about the government's back open. What happened? Why is the market not popping? We'll talk about the markets because the Dow hit an all-time high yesterday again. Are we hitting Dow 50,000? What if I had $50,000 to invest today? Where would I put it? Where would I buy? And I'll give you a bunch of stocks. Stocks I brought up recently, including my AMD stuff. My pick that I bought on Tuesday is up like 20% now. It's flying. We'll go over several stocks, and then we go into earnings. And I am going to use Sidekick. Sidekick again. It did such a good job yesterday on AMAT. I'm going to do it again, just based on some stuff. Again, I kind of geeked out and I was using Sidekick a lot. So we'll look at Sidekick. It analyzed the portfolio for me today. So we will look at that. But the shutdown is over. I mean, here's QQQ. We're just trading sideways all the way since November 6th, November 7th, last week. It's just sideways. The government shutdown, by the way, is over. The House passed the spending bill to end the longest U.S. government shutdown in history. Okay? The markets didn't even hiccup. So if you bought on October 1st, we'll just go back to October 1st, where the government shut down. If you bought the day of, it was $600. The Qs right now, it's at $618. It didn't care. So the question now moves to NVDA earnings and the Fed cut. But the market didn't care. Why is the market not up? We can go and look at the market data. The Dow futures, we're down. We're down. S&P futures, NASDAQ futures, it's down. Why? The market had it priced in. This is a classic scenario of in January. The market has already priced in whether your grandmother's making meatloaf or roast beef for Christmas dinner. It's priced in the market. And you saw all the headlines when the government actually shut down. All the headlines were, hey, the markets don't care. It just kind of, we wind up after a shutdown. So the markets didn't care. You know what does care? It's gold and silver. The Dow finished at all-time highs yesterday as the government shutdown ends near. NASDAQ lags and struggling tech. This was last night's thing. But again, the Dow has hit an all-time high. And one of the reasons why the Dow hit an all-time high? Goldman Sachs. This is a stock that I own. I bought this one. You can see this line right there. I bought this one back in April in a very large way. The 4-hour algorithm has had you in this one since $780. I've been buying since the 500. So it's still a short-term gain, but a solid company. Okay. And it's ranked number 4. We can go and look at Goldman Sachs. It's ranked number 4 right now. Well, overnight it went to number 5, ranked in the sector of investment banking and brokerage. Okay. Number 5. Do you recognize number 4? Again, I own both of those. I like both of them. Do I own Tiger? No. Do I own XP? No. Do I own Moelis? No. Do I own Morgan Stanley, Schwab, Futu, Interactive Brokers? No. I own 2. It's Goldman Sachs and it's Hood in this list. That's it. That's literally it. So I want to show you a sale because what if I had $50,000 to invest? Where would I put it today? It would clearly be Alpha Picks. Okay? Alpha Picks, you get 20% off. It's $100 savings for Black Friday. Alpha Picks, you can see 266% versus the 80% that the S&P. I went in yesterday and I put the 1 month, 3 month, 6 month, 1 year, year to date, and since inception. All of the gains, you can see in 1 month, 9%, the S&P 4%, 3 months, 18%, the S&P 7%, 6 months, Alpha Picks up 48%, the S&P up 21%, 1 year, 28% versus 14%. Portfolio returns for year to date, 41% in alpha picks. It's not even a question of where I would put my money. It would 100% be alpha picks. It is a managed portfolio. So let me just give you a couple of names and do a couple of research on ones that I've added to in this portfolio. First one, AGX. And we can go and look at it in Seeking Alpha. Okay, this is why I suggest the bundle. You can do your own research. It's a hold in the quant. Okay, it hasn't been a strong buy since back here at 207. It's trading at 364. But you want to know why I added to it? Look at this trend. The trend is your friend. It's up 25% in 5 days and still fundamentally a very good stock. The quant has it as a hold. Wall Street thinks it's 295. It's time to trim at some point. When will I trim? When the 4-hour algorithm gets me out. This is how you use the tools together. Another one that was a big winner yesterday. SSRM. This is a gold stock. And you can see it's a strong buy in the quant. How much? 8% in the last 5 days. That is a good stock. So let's go over to the chart and let's see from a 4-hour algorithm standpoint how this one works. Well, it gave me a buy here at 20. I said before that I trimmed this one at 25. Why? When you look at this one, this goes all the way back to 2020. It hit 25. Then back in 2022, it hit 25. Then now in 2025, it hit 25 and it pulled back. So why did I add to it? Because the 4-hour algorithm told me to, and we're in an upward trend. And again, 8% in 5 days. I'm perfectly happy holding more of this. Now let me give you another one because this one shocked me. Okay, this one was up big yesterday. It was the biggest winner in my portfolio, up 7%. You can see 1025 started buying this as the Alpha Picks portfolio. Okay, this was the biggest winner, but I only hold it at the portfolio holding percentage, which is very small. It's super small, by the way. Is this a buy the dip situation? Because year to date, this is down 14%. Okay, over 6 months, it's 21%. The quant has it as a hold. It hasn't been a strong buy since about the 150s. You're trading at 113. Is it a buy the dip situation? Well, let's go in. Let's look at this because we know from the quant standpoint, you wouldn't add to this. But here, I identified that 134 as previous resistance. It hasn't hit it. But it did break through and then use it as resistance right there. So to buy at 106 when you're trading at 113, pretty good. MACD down low. RSI, it was down at 24. And we can take a look at a weekly, which just shows it is oversold. But you're still trading over the 200-day with a positive trend. The 50-day may need to come. But again, where's that 50-day? Or I'm sorry, the 21-day? 137. 137. Where's that? Right up about here. So while as I'm buying here, I have a clear resistance standpoint that I will start to trim. But I put a stock in the November watch list that I published that I said, hey, there's earnings coming up this week. It's a strong buy in the quant. And it had a buy in the 4-hour algorithm right before. And that's Allstate, okay? It's a strong buy in the quant. Significantly better than it was 6 months ago. And you can see 6 months ago, it's been up 3%. So it hasn't taken off. Again, strong buy in the quant. The alpha, it's an alpha pick. Alpha picks typically outperform on earnings. So the risk was there. The reward is also there because you bought right down here at about 193. Where you're trading right now, 210. That's a resistance standpoint because when you look at this and you just bring this over, ever since November of last year, it hasn't been able to break that. So the risk reward was absolutely clear. And this was in, by the way, the November watch list. And I put it in there right down here in the November watch list. I put it in there for all the subscribers. So let's go over in the chat section. I put yesterday, or I'm sorry, I think it was Tuesday. My buy that I did on Tuesday, it's now up over 20%. I outlined the reason I bought it in the chat. Again, that would have paid for the newsletter for the full year for anybody that would have taken like $1,000 in that one. So again, go check out the chat if you want to know which one I bought. But I'm going to show you one that I bought, and I'm going to show you the actual purchase. This is a screenshot from my Fidelity account. Average cost basis, $160. It's AMD. Purchased on September 15th. Yes, I let the subscribers know about it. Why did I buy it on September 15th? 160? You can see right there. 4-hour algorithm. Now it got you out at 42%. I have identified that 227 as support. We've used it as support. So now I'm sitting there at 258 with a 61% gain. What am I going to do? If we get down near that 227, I'm going to buy more. That's the new support level. I don't have a full position. You can see right here on the 4-hour, the MACD has completely reset down to the oscillator. Okay. The RSI is at 59. It's not like it goes down below the 50 level very often. I like the stock. And I said, you know what? Can you find a newsletter where I said AMD will outperform NVIDIA over the last year? It was October 29th. I know I put it in there in September, but I said, hey, it's going to outperform NVIDIA, and I've got my thesis in there. So I'm going to add more because I do think that this one outperforms NVIDIA. Might be a hot take, might be a crazy take. I don't know. But you've got to use your tools to find the opportunities. And my tools, I just showed you several of them. Okay. The 4-hour algorithm is one of my main tools. It's in Trendspider, and you've got a crazy Black Friday sale. Go to Linktree, linktr.ee/daily stock pick, click the top link, and you get Trendspider. Now, I steer people towards this higher tier. Why? Because they're giving you one session of training with a product expert on Zoom. It's not like a video that you watch or anything. It's a Zoom. You can literally ask the question, and I'm going to show you several things that you can ask about during your sessions. But here's the calculation, and I want you to do this for yourself, because $64 a month, is that a lot? Might be. Again, I'd say if you were investing $64 a month and putting in for a long-term S&P, you're probably going to do okay. But if you're putting it in this chart, you're probably going to do better, because again, you're going to learn skills that will last you your entire investing career. And that entire investing career will be a lot longer than 12 months. Learn the tool, get it, and then after a year, you can go down to a lower level plan. Maybe you don't use it as much. Again, that's the hack. But take advantage of this savings because it's huge. Go and figure out something that you want to learn. Go and look up hourly lessons. Then go and take $64.20 times it by 12 and then divide that by 52. I guarantee you the professional thing that you're going to learn, it is far more expensive to buy the tools that you need and the training that you need to actually do that service. This gives you these lessons, and then it gives you the tool for a year free. Now, if you can't afford $64 a month, consider the $41 a month. This comes with one free training. It comes with everything that you need. And if you get an annual plan, you can you get my 4-hour algorithm. Now, here's the question. I got a question. Is Trendspider good on a mobile phone? No. They have an app. It works on your phone. Full disclosure, I don't use the app. I use the Webull charts. I like the Webull charts, but Trendspider is better. I just like the fact that I can go into Webull and I know the chart. The charts on your phone on Trendspider are lacking what the desktop software has. It's just a difference, and I don't like looking at it because I always feel like I'm missing something in that Trendspider online. But it does have an app. And here's the thing. If you want to try the app, it's freaking $5 for the next 2 weeks. Go and download the app. $5. And you don't have to renew. Just cancel it within 2 weeks if you don't like it. But go and try the app. That was a question that I had. Now let's look at some other stuff, because this one, there's an indicator called relative performance, okay? And we can just Google Trendspider relative performance, and it comes right up there on Google, and you can read all about how it's calculated, everything about it. But if you were watching it, if you were setting your alerts and saying, hey, I want to look at a stock that might tell me a buy when its relative performance is low because it's a good stock with good quality products, with good profits and good management, Eli Lilly. Look at how it's underperformed. And again, are you going to buy in this section? Take the risk, get the reward. This was when the stock was at $650. I've been on this podcast saying it's a $900 stock. Well, guess that today it's at $1,000. And down here, the 4-hour algorithm would have had you in. Again, if this is a stock that you like, and you like pharmaceuticals, you take a lot of drugs, your parents take a lot of drugs, you know people who take a lot of drugs, you know overweight people who want a GLP-1. You want all of that stuff? You want to eat your chips at night and drink a Pepsi and get a GLP-1 and pay Eli Lilly $500 a month for their weight loss program? Yeah, you can do it. It's $1,000 a month for $1,000 for this stock. Again, compounding. The relative performance was clear. There is a whole list. IBM, ExxonMobil, Datadog, Bristol Myers, Xpand, Intuitive Surgical, all of them. Import the relative performance 30-day high scan, candle coloring, and start it for $5 for the trial. Again, go and try it. This is a phenomenal indicator, And maybe you don't like relative performance. Well, there was another clue. Insiders sitting at 50% gain now in just a few months. Just a few months. Look at this indicator. It said, ooh, there's insiders buying down there. I better buy this one. So again, the indicators that you have in the tool are fantastic. So there are plenty of stocks in this market that are moving. We'll go over a few. Here's the momentum movers. 10 stocks that surged over 40% in the last month. I've had half of these in my watch list and on this podcast. So if you've been listening to this podcast, you know about this one. SanDisk, okay? Added to the October watch list at $98. Where are you today? $268. You know about that one. Western Digital, same thing. Added to the watch list at $112. Where are you today? $166. It's a good opportunity. Again, if you're listening to this podcast, you know about these. There are several of these that I have mentioned, including Bloom Energy is another one, and Rivian. This is Hamid's favorite. I told you, hey, he's been buying a ton of Rivian. It wasn't added to a watch list, but I have had it on this podcast. Now, did I add this? No, I don't like Rivian. It doesn't fit my thing. But kudos to everybody that followed Hamid. Hamid is a great investor. And the point is, even in this sideways market, there are tons of stocks that are continuing to go up. But on the other hand, Oracle is not going up, okay? This one shot up, and it's now been killed. Let's go take a look at the chart. Let's do some analysis of this one. Because if you look at a weekly chart of this one, okay, you can see the MACD has never been that high. The RSI was at levels where it pulled back before from 200 all the way down in April to 120. This is simply getting killed based on debt. And again, This article goes over it. If you own Oracle, if you want to own Oracle, if you have any interest in Oracle, or if you own Meta, it is what rinse and repeat. Meta is getting beaten up for the same exact thing, spending. And that's the issue with some of these stocks. Is it all stocks? No. But some of them that ran up too fast are coming back to reality. And these will pose an opportunity because Oracle is a good company. It is run really well. Just the question is, all of the spending that they're doing, is that going to come back and hurt them? Okay? The valuation has changed from 6 months ago. It's an F. Okay? The growth has gotten better. The profitability has stayed the same, but it's still fantastic. The momentum, it's not great. I mean, it's about the same. Revisions, they're actually up. So it's a better company today than it was 6 months ago. And it's up 45% in 6 months. At some point in time, this becomes a buy. Its average Wall Street price target is 344, which is 51% upside. But look at how they chase this up. They will absolutely chase this down. So just understand that as fast as they chase this up, they will chase it down. The quant, it's been a hold forever. So it hasn't changed. It's just a hold. So the strategy that you take should probably be more one of a technical strategy if you're worried. The 4-hour algorithm, you can see it on the screen right here, makes you 137% over the last 2 years. It hasn't had you in since 285. So when you're calculating the monthly spend on Trendspider, understand if you had a strategy that might save you that $60 a month. So it's not just about making $60 a month. It might save you. And as we go into this elevated market that potentially could have a pullback, that's where the strategies come into place. And this type of analysis is done by Steve Kress. This is why the perfect bundle is Trendspider on the Black Friday sale and Seeking Alpha bundle, which is premium and alpha picks. We went over alpha picks. That portfolio just blows it away. Save over $200 when you get that with premium. It is such a good deal. And Steve Kress, 5 tech and consumer stocks at risk of steep declines. He goes over it like a master, using the exact data that you have access to. He teaches you how to use the quant, how to use the factor grades, how to look at these things, okay? And how to do this. Now, one of the ones that he looks at is Sprouts Farmers Market. And this one's interesting because Sprouts Farmers Market was a huge winner in the Alpha Picks portfolio. And it was one that made a great gain. Now you can see it's just tailed off, huge gap down. Does this one have the capacity to fill that gap up to 103? You're trading at $79. Does it have the capacity to come back up? Well, when you look at the weekly chart, it certainly looks like it was. Here's the alpha pick when they picked it. That was during its peak. That was at $73. This got all the way up to $180. And it's now down at its 200-day. And its MACD well below. Its RSI, nobody wants to buy this. It's a 23, 25. But Sprouts Farmers Market, Steve goes over it. It is a strong sell in the quant. It's not worth the risk for me. So it's out of my portfolio. It's out there. Again, that's the way I like it. And I want to do this. Okay, I've got this daily stock pick core portfolio. It includes Apple, Amazon. You can follow it on Savvy Trader. Again, it's on Linktree. You can just go down there and follow it if you want. It's free to follow. But I wanted to take a look at the portfolio. And so I went to, and I will include this in the newsletter, how I did this, but I went to Perplexity. And I said, give me an idea. Let's see. I'll tell you exactly the prompt that I use. I have Trendspider. I want to ask AI Sidekick to analyze a watch list for me and tell me which stocks I should currently be adding to based on strength of the chart and fundamentals, and which stocks I should be trimming or selling based on the charts and fundamentals. Plus, I would like it to guide me if there are similar stocks that are currently in an upward trajectory in the S&P 100 that should be added to this watch list and the portfolio. That's literally what I asked Perplexity. Come up with a prompt. It came up with this prompt, okay? So I put this into Trendspider, and I said, give me an idea of what I want. Well, it says perfect. I have everything I need. Let me present the analysis. Well, it's telling me in the core portfolio, I should add JP Morgan, American Express, Gilead, Amgen, and FedEx. And it gives me the reasons why. This is an analyst in your pocket. This is Sidekick. Okay? Here's the chart. S&P 100 candidates, 90-day performance. Look at that performance. The 90-day comparison. PE ratios. Okay? Summary. Add increase from the current list. Goldman Sachs. It wants me to add Goldman Sachs. Breaking above 840. Microsoft, Azure AI momentum, $38 billion OpenAI deal. Wants me to add Coke. It's a defensive quality. Steady uptrend. Bank of America breaking out 11% in 30 days. Qualcomm, cheapest tech at 15.9 PE. Okay, and it's got iPhone. Now it says to hold Apple, Amazon, Walmart, Costco, and MPLX. Solid, but fully valued. And it's telling me to trim, okay? Google, Palo Alto Networks, overvalued PE at 92. Hood, CFO exit, bubble valuation. Hood has their earnings coming up. Shopify, margin compression. Tesla, China sales. Roblox, unprofitable, lawsuit risk downgrade to hold. Simon Property, REIT exposure, no momentum. And the new additions. JP Morgan, better risk. Again, it analyzed this portfolio and said, this is what you want to do. And it will take you to those charts when you click on it. Again, you get Sidekick when you get any of these subscriptions. You can even try Sidekick, load in your portfolio, use my prompt, and go and have it analyze it and then cancel within 14 days. That's how you can do this. Again, it is about the tools that you have. It is about how you use them. We used Sidekick yesterday. To look at applied materials. Okay? Use it today to look at BABA. So let's just go into Sidekick. We have the applied materials earning things. So I'll just take this and I'll copy it and I'll do a new chat. And I'll say, I want Simon the data dude. I'll plug this one in. Analyze, not AMAT. We're going to say BABA. And we're just going to, that's all we're going to do. And we're using Claude 4.5. And this comes with the tool. So if you want to do this, again, BABA, from a fundamental standpoint, it's at high risk of cutting its dividend. We don't care. The dividend, we're not investing this for the dividend, but their earnings are coming up. When we look at the earnings announcement, it's coming up $11.25 in pre-market. Okay, the earnings per share normalized estimate 81 cents. They announced $2.07 last time. They could beat that one. Earnings per share estimate 39 cents. They announced $2.05. A revenue estimate, it's about the same as last time. So again, do we want it to hold? It's ranked number 14, but is this one, again, they're talking about DeepSeek. It's up 3% in pre-market. I know the chart on this one. We'll pull up the chart on this BABA in the 4-hour algorithm, and it's so far it's weak, but it's within that range of 212 and 140. So maybe on a good run, maybe we get this one. You can see the MACD back there. The fundamental metrics tool isn't returning data. Let me provide analysis what I have. So again, it gives you options flow, gives you catalysts and drivers, major business, risk reward recommendation. Given the 18% decline from October highs, much negativity is priced in. However, short-term traders, high risk. Wait for post-earnings clarity. If it holds 156 to 158, Possible bounce to 165, 170. Long-term investors, attractive entry if you believe in the China recovery plus AI story. Dollar cost average between 150 and 160. It is literally giving you a playbook. Options player, straddles expensive. Consider waiting for IV crush post earnings. It literally gives you the strategy and it tells you, hey, here's the risk reward. Bearish case, 40% profitability. Base case, 40% probability. Bullish case, 20%. Again, and they give you price points. And you can ask it to put those price points on your chart. Again, Sidekick is amazing. Amazing. Now let's talk about some earnings. Because Cisco announced earnings, okay? I'm not going to put this in. Here's what you have to know. Cisco is up 5% in pre-market after being up 3% yesterday. This was up as much as, I think, 7 or 8%. Why? The AI narrative. They beat and raised based on AI. That's all you need to know about this. Whether you want to hold the stock, that's your opinion. That's your choice. I don't. But again, this one, from a 10-year perspective, it's up 168%. If we just look at the charting against the S&P and we go to 10 years, it is underperforming the S&P by almost half. It's just not a great stock. But again, it has done really well over the last 6 months, outperforming the S&P. Year to date, it's outperformed the S&P. Over 1 year, it's outperformed the S&P. And then you get to 3 years and it's underperforming. So is this one rebounding? Maybe, again, a strong earnings. Now, Disney, I will tell you, Disney falls after its entertainment segment lags in full quarter 4. I've told you before, and I will pull this up. This has been on there forever. $120 stock. When it's down below that, you buy it. Now, would I buy this one at 112? Where are you trading right now? 110? Did I buy at 112? If you bought at 112, you knew your upside was 120. Was the risk worth the reward? That's the choice. Is the risk worth the reward? Here's the thing. Even though you're going to be down today, okay, on that 112 buy, the performance of the 4-hour algorithm, you make 68% versus if you just bought 2 years ago and held it, you've only made 36%. So again, the 4-hour algorithm protects you. If I saw all these losses going into earnings, I'm not buying that 112 knowing my projection would be 120. But once you get over that 120, look out above because there's a lot of movement to the 150s. And by the way, let's just go and take a look at some of the fundamentals of Disney. It's a buy in the quant. The market cap of this is $209 billion. Okay? Remember, they have parks. They have cruises, they have TV channels, they have a streaming service. But let's just go and look at Netflix. Remember, $200 billion market cap. The market cap of Netflix is twice that of Disney. And think about what Disney owns versus what Netflix owns. So is Disney going to be a mover? At some point, it will be. But it's just not for me. And I've been arguing with my dad. Get rid of this one. I don't like it. But it's it's a $120 stock. Now tonight, I'm going to be going over applied materials with Trendspider. And I brought up this one that I brought up yesterday. I brought this up to Mike and he said, we got to find a way to do this. Unfortunately, I can't share my screen with him. He's the one doing it. So I gave him the prompt. Hopefully it pulls up just as good. Now, what did this one say? We're going to see exactly what it says. AMAT heads into earnings with mixed technical setups. And it basically told you to sell applied materials going into earnings. Why? Because it's done this. It's rinse and repeat. The 4-hour algorithm has you out at 46% gain. And Sidekick told you, going into earnings, when you see these big gains, it hasn't held. It's been a 10 to 15% slide. One I like better tonight is actually Better Home and Finance. But the 4-hour algorithm has me out. I haven't bought it, but boy, this one looks weak. Now, if they have bad earnings and it comes back down here to 25, I'm buying. I like this one. This is another Eric Jackson story. So if you want, go over to Twitter, find Eric Jackson, and you'll find his story about this one. Lowering rates, that's a good story for this. And you're not even close. Again, this was a SPAC, and then they did a bunch of reverse splits, and it's just a bad story. And if you go over to Seeking Alpha, it's not one you would do, but you want to trade this one. At least I want to trade this one. It's a hold in the quant. Wall Street has, 2 analysts that cover it. Nobody put a price target out there. So there's not a lot, but the valuation sucks because they're not making money. The growth, 69% revenue growth year over year. That's great. Profitability, gross profit margin of 100%. Momentum, it's been fat. Look at that momentum. And the revisions, again, it's 2 analysts, one up on earnings per share, one down on the revenue. So the analysts, the Wall Street stuff, take it with a grain of salt. And if you want to look at some analysis of this, you can do that. This guy published this analysis right here. It's a hold. The S&P is up 3%. Meanwhile, since he published this, Better is down 11%. This person has a sell, and Better change to date since he did that, it's up 73%. So again, you have analysts that do that. And if you just want to analyze it with AI, you can do that. Again, the kind of perfect bundle for me is Trendspider, and it's the bundle. It's this bundle. You can get Pro's on sale. You can get Seeking Alpha Premium by itself or Alpha Picks by itself. All of it is on Linktree. Go and explore the offers. Now, I want to end with bulls versus bears, NVIDIA, because we've been through the government shutdown. We don't know if the Fed is going to lower rates in December. That's going to be something. But we've got NVIDIA coming up with earnings. This gives you a good look at NVIDIA with the bulls and the bears, okay? You can even ask Sidekick, what do you think about NVIDIA earnings? It will go and analyze it for you. Now, here's the thing. You can look at the factor grades of the quant. It's got it as a hold. NVIDIA has been a hold in the quant forever. Okay, it's never been a super strong buy, even down here at $16 back in 2022. It's never been a strong buy. It just doesn't like it. But Wall Street thinks that it's worth $231. That's a 21% upside. And there are 64 analysts that cover this. Now, again, they're monkeys. You don't want to listen to them. The valuation is high. But the PEG ratio is 1.29, and that's where it focuses in on growth. Now, it's 71% revenue growth year over year. That's huge. And all of these metrics are an A. But the reality is, if one of these growth perspectives come down, and then they say, well, we can't make enough chips, that's where I think NVIDIA gets killed. And its 52-week range is between 86 and 212. If you were buying at 86, I'd feel way more comfortable than buying at 190. That's why I'm buying AMD. Again, it's a personal choice. You make yours. But that's the show. And I think this was one of the best shows that I've done because it shows you how to use these tools. And you've got the Black Friday deals going on. It's on Linktree. The bundle here with Seeking Alpha, we get an alpha pick on Monday. Join me on Monday. I will probably be making thousands of dollars just by buying the damn alpha pick and then waiting a couple of days and selling it off to just the holding percentage in the portfolio. And then premium, I can go and look at the basics of my portfolio and I can use the AI. And then you've got Trendspider. And this is just if you don't have Trendspider, I mean, good God. Try it out for $5. Skip, Chipotle. Don't get the guac on your burrito. Go and get a 2-week trial of this one. Use the link. Go and get the 2-week trial. Try and use the Weinstein, the Mark Minervini. You can use the turtle strategy. They have so many things on the Trendspider store that you can try for 2 weeks. And if you like that, what it tells you for 2 weeks, then go and sign up for a yearly plan. That's the show. If you have any questions, everything's on Linktree, including my email address. So if you have any questions, I'll talk to you tomorrow. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading. hopes and fears.